J.C. Parets. He's the founder of Eagle Bay Capital, 10-year market veteran who actively manages money using technical analysis and behavioral finance into his practice. JC Works has been featured regularly on CNBC. JC Parets in the house. How you doing there today, JC?
Having a great morning. What about you guys? How are you?
We're doing good. We're doing good, boy. Just talking about all the craziness from yesterday, and just want to get your take. I mean, you're handling a few dollars over there. You get a situation where the exchanges are closest. Do you try and trade on the secondary exchanges? Do you just sit on hands and wait things to be resolved? How did you handle it? Because you got a lot of responsibility there. You're managing a lot of money.
Yeah, I mean, the New York Stock Exchange thing, I mean, I didn't really care about that. I was told that the media made a big deal about it. They wasted a lot of people's time, but, for the most part, but nothing really changed. Unless I saw it on Twitter, I wouldn't even know that the New York Stock Exchange was even down. Quite frankly, I actually didn't even make any trades yesterday. I was kind of just watching the overall market. I like bonds. We're in bonds. So for us, watching the Nikkei get destroyed yesterday, Nikkei down 1150 on the day, almost 6%. For us, that was great. We're in bonds. So we had a good day yesterday.
What about today? We get this big rally in China here overnight. Obviously, we're piggybacking off of that rally here in the U.S. markets. This morning, we bounced off that technical support level of 2040 for like the third or fourth time here in a row. JC, how are you playing the U.S. markets here today?
I'm not. I'm watching that level. You're looking at the ES futures and the lows that we held, all week really, right? So the lows from
Monday, Tuesday, and Wednesday.
That's 2035 level. That's what I'm watching. We're having a nice little rally today. I think if we can get above the highs from last week, call it 2080 on the ES, I think that would be very positive. And if we break the lows from this week, I think that would be very negative, which I think is the higher likelihood, the higher probability outcome is we break the lows.
Yeah, JC, you say no thing is a triple bottom, but we got a triple bottom in there.
No, that's not a triple bottom. We're talking about support from the last 3 days. That's not.
That's not a triple bottom? 3 lows within 2 points of each other? Dennis, help me out here.
No.
I guess it depends on your time frame.
That's support from the last 3 days. That's not a triple bottom.
Okay.
Using a longer time frame there.
Yeah, I mean, there's absolutely no way that, on such a tiny little time frame now. When we talk about triple bottoms, we're talking about, something like, look at like XLE, for example, right? Energy, which has put in, we've retested these lows, for the last 7 months 3 times. So in this case, you can call that a triple bottom. In my opinion, triple bottoms don't exist. And sure, might we get another rally? Yeah, but in all likelihood, we're going to break those lows in XLE from the past 6-7 months. You know what I mean? That's what I'll consider a triple bottom.
We were just talking just before you got on about Shake Shack here, and Goldman's downgrading the stock here to sell today. The stock has been murdered basically in the last month, falling from 80 down to almost $50 here this morning. Where's the bottom in Shake Shack?
0.
0. You're telling me you don't eat there?
I love it personally, but remember, we trade stocks, not companies. They're 2 completely different things. I love the fact that Goldman Sachs says to sell now at 50 when it was at 90 just a couple of weeks ago. So, just a good example of, the sell side, and, you got to do your own homework, and you can't listen to the sell side. What value does that bring? Goldman Sachs today says to sell it at 50. It was at 90 a few weeks ago. I mean, that brings 0 value to the table. 0. So where do I think it goes? I have no idea. I could see, on IPO day, we rallied up towards near this level, then sold off, and then, the rally in Shake Shack really got going in mid-April. right around this 50.5 level. Now Goldman Sachs says to sell. So I could see from a contrarian perspective how now we can get a nice little bounce. I wouldn't buy it for a bounce. There's no reason to be in this. This thing has been crashing for a month and a half. There's no reason to be in this.
We had some
and
other.
If you do, you better keep those styles real tight.
We had a couple other interesting ratings changes overnight, which we haven't mentioned yet, but Mobileye, which is symbol MBLY, is catching an upgrade from Baird here today, and that stock is actually breaking out to a new 52-week high here on the chart if we're looking at it. It's a new 52-week high, not an all-time high though, but it's breaking out to 56.60. A previous high was 56.33. Is this one on your watch list, Mobileye?
I see it. I see a ton of resistance here from last fall. In the high 50s, 58. 58 and change. So from a risk-reward standpoint, it makes little sense. To get involved. I mean, you would be buying it into all-time high resistance. I mean, so for me, it's not worth the risk. I think a good example. You guys always ask me about the Tesla. I told you guys that flat 200-day moving average, pointed to not trusting this thing, and all likelihood is probably going to mean revert. Sure enough, this thing's gotten destroyed all week. That's standard textbook characteristics of stocks with flat 200-day moving averages. In all likelihood, Tesla probably continues to get crushed. I hope it gets crushed another 100 points. I think it would be great. That would be perfectly normal. So, again, buying a stock like Tesla into resistance with a flat 200-day, you're asking to get killed. And I think same thing with the Mobileye. I think if you're buying it up here, you're begging to get killed, begging for it.
JC, you have been cautious on Apple since it hit the 130 target, and you thought there was more risk to the downside than the upside. Bad day really dragged the markets down yesterday. Apple here kind of now near the bottom, has taken out the bottom. Not exactly the trading range here that you go back since March. Is it time to stick your toe in the water here in Apple, or are you just going to, up $1.27 in the pre-market? Still more risk to the downside?
I think so. That weekly chart, again, isn't it beautiful? There's a reason why we had that target on multiple time frames. There's a reason why we stayed away, and forget that it's even gotten crushed over the last couple of weeks. Just from an opportunity cost perspective, if you've been in this thing since February and ignored those price targets and for some reason ignored those Fibonacci extensions, you've gotten killed in opportunity cost. Killed. And now it's even better because now it's actually even rolling over, which is even better. I think it's got a ton of downside. I think it's going a lot lower. I wouldn't touch this thing at all. I see zero reason from a structural perspective, bigger picture, to be in Apple. Like, if you're a long-term investor, I think there's even less reason to be in Apple because I think it goes a lot lower. Short-term trading-wise, maybe around the 119 level, I could see a bounce or something like that. But the problem is I don't know how much it would bounce. So me personally, I just would not touch it at all. I know people like to talk about it and everything like that because we have phones and watches and everything and the biggest company in the world, and that's great. But I think it gets back to the fact that we don't trade companies, we trade stocks. So sure, can we get a decent bounce from like the 118, 119 level? Yeah, but I'd be selling any strength. I'd be selling any strength into like 125, 126. I don't like it at all.
What about the Biotechs here? They got a little bit beat up here the last couple of days. We are seeing a little bit of bounce back this morning. We got UBS commenting on a couple of stocks this morning. They are downgrading Amgen. They are also downgrading REGN to a sell. What are your thoughts on the Biotechs overall here? I'm looking at that IBB and I'm seeing that 360 level, and that was major support basically back in May and June. We bounced out of there. We came back to retest. We bounced. Now we kind of came back to retest there yesterday. What are your thoughts on the IBB?
I think it's probably a good short. Back down towards like 335, 334, something like that. I hate it. I think it goes lower. When you have when you have a breakout, like something that you had in late June, and that fails miserably, the market is speaking. I see no reason to be long this thing if we're below, 370, high 360s. That former resistance, towards the end of April and all of that churning, in early mid June, that 368 area. You can't be long if we're below that. I mean, in my opinion. So we're not. So it probably goes lower. I'd be covering shorts around 334. That's probably the target. In all likelihood, it probably goes a lot lower than that, but that's what I'd be covering.
JC, you kind of have a bearish tone to the interview today. Just thoughts on maybe it's just the stocks that we're mentioning here, but looking at the S&Ps, are you turning? Is the worm turning here? Is JC turning into a bear, or just a correction, or am I mistaking your comments?
I'm in the same camp that I've been in for months. The stock in terms of U.S. equities anyway. The U.S. stock market, I haven't been a bull, so I'm not really turning. In fact, we haven't been buying stocks at all. We've been long bonds. I told you guys that the last week. We were in bonds, so I'm loving it. I mean, quite frankly, personally, I hope the stock market crashes. I'm not telling you it's going to. I mean, that would be nice, but I'm not short stocks. But because we're so long bonds, I kind of am, right? So the reason I'm not shorting stocks is because I'm long bonds. So I'd be, the negative correlations right now are so high, I'd kind of be, really adding to that position, and I'm comfortable with where we're at. I don't own any stocks. I haven't owned any stocks in about a week and a half, a couple of weeks. So it's not so much that I'm bearish. It's more I don't see a reason to buy at all. I see more downside. I see the Nikkei down over 1,000 points yesterday. And that's a great reason, why, I'm fortunate that I don't have a TV at work. I can't imagine how bad TV was yesterday. I don't think that what happened in the Nikkei yesterday was discussed enough in terms of the headlines that I saw. I mean, I could be wrong. You guys may have been talking about it. I don't know if people may have been talking about it, but from what I saw, everyone's worried about, Puerto Rico and Greece and, whatever else they're making up these days. I think the big story yesterday was Nikkei. I mean, that was a big move, man. 1,100 points on the Nikkei, that's a lot. So that bothers me for sure. The strength in the yen bothers me for sure.
What about crude? Does that bother you too? What about crude? What about crude? Does that bother you too? Because crude's been beat up here in the last week as well.
No, it doesn't bother. I mean, listen, there's no correlation between equities and crude oil. There isn't. But I like it. I mean, for me, it's great because, when we broke the uptrend line in crude from the March lows, we broke that in May. There was no reason to be in crude oil, and we have a downward sloping 200-day moving average. So there's literally zero reason to be long crude oil. So the fact that we rolled over, I think, is great. We're finding support in near that January, those January levels, and we probably bounced from here. But for me, the only reason I think that has any impact on U.S. equities is because you've got the Exxon Mobils and the Chevrons of the world. These are huge market caps, so they represent a large percentage of the averages that are cap weighted. So crude rolling over hurts that. So in that sense, yes, there is exposure to oil for the overall equities market. But other than that, one has nothing to do with the other. It's not a good thing or a bad thing.
Does your bullishness, in the bond market spill over into the utility sector? That's been beat up very, very bad. Caught a bounce the last couple days. Looking utilities, or just sticking with the bonds?
Yeah, remember, utilities are equities at the end of the day. So on a relative basis, sure, I could see some outperformance. So if you're going to be buying use and, shorting S&Ps against it, I don't think that's the worst idea. But to be buying utilities on their own and being long Utes just because you think bonds are going to go up, it's one of those things where if you think bonds are going up, why are you buying Utes? Buy bonds, right?
We've been on the line with J.C. Parets. He's the founder of Eagle Bay Capital, 10-year veteran of the markets. Technical analysis is his forte and little work in behavioral finance. J.C., thanks for joining us. Have a great day, and the crew will speak to you next week.
Anytime, guys. Sorry to be so pessimistic, but,
hey, we want the truth from you, T. I mean, that's why we have you
Tell the
on.
truth, brother.
Yeah.
Thank you, JC.
The truth shall set you free. All right. It is.
That's it. All right, guys. Go get them.
Thanks, JC.